Hi, this is Greg Maxwell. I wanted to talk a little bit today about what we call non-qualified structured settlement annuities. So a qualified structured settlement annuity is essentially the typical structured settlement annuity that you're familiar with that's based on a personal physical injury. So most of the time the clients, most plaintiffs that we work with are receiving a reward or an award because of a personal physical injury that they've suffered. And so when they set up structured settlement annuities in that situation, all of the interest that, not only the principal amount, but all of the interest that's earned inside of those annuities is also tax exempt. So that's a huge benefit of a traditional structured settlement annuity. In a non-qualified structured settlement annuity, those annuities are designed for folks that are receiving non-personal physical injuries. So that's something like a construction defect case, an employment case, a whistleblower case. Those are the more common types of cases where you would use a non-qualified structured settlement annuity. And in those situations, it's almost more important to the plaintiff to use an annuity because you're able to stretch out the taxation of that award so that your client doesn't have to pay the tax on their award and also on the plaintiff attorney's portion of that award as well. So because of the Trump tax cuts, in most taxable damage cases, your client will have to pay tax not only on their award but also on the plaintiff attorney's fee portion as well. So it's kind of a double whammy to the plaintiff right now until Congress gets that fixed, which we hope they will. But by spreading it out with a non-qualified structured settlement annuity, your client's able to spread out the taxation of that award to several tax years, lower their tax bracket, and save a lot of money on taxes. So if you have a whistleblower case, an employment case, a construction defect case, an environmental claim case, something that's not based on a personal physical injury, give us a call and we'd love to show you and your client how much taxes they can save by using a non-qualified structured settlement annuity.